Hello from Chicago. Alan Knuckman, high above the trading floor here at the CME Group, talking energy with the focus on crude oil. Boom go the markets, but boom in a good way today. A macro market march. We had stocks, gold, and crude all rally, and we're making a move back higher after the beatdown that we've seen over the last 2 weeks. Now let's remember, it was only a 2-week unkind unwind. A lot of that was profit taking, where we had gold, crude, and stock market all at these very high levels. Let's talk about the March contract today, closing up $1.50 at 60.85. Today we're still trading the March contract. We'll be getting out of that, and we'll be trading April from here on out as we shift over in the futures month. But it was nice to see all assets reflate is the word I'm going to use instead of inflate. The key here was the dollar. The dollar decline is back on. So the dollar has been moving down in 2017. That had been supportive of commodities and stocks, obviously. We saw a little bit of a flight to quality, a little bit of a reserve currency buying when we had that uncertainty last week, but we're resuming that overall downward move. And the dollar now is at 89, so about 75 cents away from that 3-year multi-year low that we saw on the 25th of January, the day before the stock turn. Also, psychologically, $60. We're above the 60 level. That's a big deal from a trader's standpoint. Mentally, we've got a $60 handle instead of a 50-something. Now, this decline came back to, as markets often do, came back to that $59 we had in crude oil. If you remember back in December, that couldn't push through. When it did, it was up, and away. So the markets come back. Now, that was a resistance back then in December. So now that has acted like a weekly support level, and we have bounced above it. It's important that we stay above 60 psychologically on a weekly basis. So looking at things technically, because right now it's a macro market, we're not looking at the individual supply demand components of oil so much, so to speak. We're looking at the big picture. We're looking at how the stock market is doing in the overall macro market in general. But if you look at things technically, price, like I do, the decline from 66 to 58 lows, those extreme lows at 58, puts the midpoint resistance at 62. So a rally above 62, which is going to be the first stop on the upside, a rally above 62 is very positive, very bullish for a full V recovery back to that 66 level. And if it does, then we're looking at 70. So focus on the price right now as the market sorts out what's happening from a macro picture with this stock unwind. So on the downside, keep an eye on 59. 62 on the upside is the midpoint resistance, and then 66, that not multi-year high, up above. Alan Knuckman here at the CME Group, where it all comes back to commodities.